without further ado, we are closing out this fantastic day of tokenization. The final speakers of today's event are not only but the two main men of the RedSwan initiative, two of the smartest guys you'll ever meet in tokenized real estate, especially Don Oparah, Ed Nwokedi. Please, gentlemen, come up and take it away.
It's always great to be here and be talking with Don. He's the one that got me into this mess in the beginning of 2018. So we've traveled the world together to talk about tokenization. And really what we want to do here is just to show you a little bit about how it works. We advise a lot of institutions on tokenization on the investor side, as well as on the supply side. And so we're going to give you some ideas of what we do. We're going to be pretty quick, but hopefully this is very educational about the process of tokenization will be due. So what is RedSwan? We're a full service tokenization platform that we dedicated towards commercial real estate and now carbon credits that we think offset the CO2 emissions of commercial real estate. We have full service, meaning that we evaluate the properties. We have experience with commercial real estate from, like I said, Cushman & Wakefield days, but also the ability to now mint these securities into digital securities, put them on the wallet that belongs to the owners. So the owners are holding on to their own securities, or you can hold them on centralized. But also full service is be able to now transfer those legitimately, compliantly through with our SEC license to investors, both here in the United States as well as overseas. And then finally, for disposition of those securities through an exchange. We have a bulletin board exchange now, but we're working on a full-blown ATS. Todd?
Okay, so talking a little bit about some of the challenges that motivate this whole business in the first place. So as we've talked about throughout the day, typically a lot of people are just locked out of commercial real estate investment, period, either because the buying price is too high, or because the cost of acquisition is too high. They have to fly around the world to get assets in other countries and so on. And then obviously the challenges of liquidity. People don't want to tie their dollars up if they have no way of getting out. So these are a lot of things that motivated us to then take advantage of all the new opportunities that tokenization provides to innovate within this industry.
We're licensed with FINRA, as I mentioned. We took our time to make sure that we can get a license. We realized that we were selling securities back in the day when we started. Everybody was talking about ICOs and, flirting the situation where you're not selling security. We knew real estate was securities. We knew we had to get a license. We now have a fully licensed entity with 5 licensed broker dealers on board. I myself is licensed, and many members that you see here are also licensed on our team. So this allows us to sell to U.S. members as well as foreign investors. So we enjoy that because I think that there's a lot of opportunity for one of my clients from Cushman & Wakefield that is here in the audience that I've done a lot of business with from Hangzhou, China, and still looking for bringing capital into the United States to buy U.S. dollar-denominated assets.
Okay, so as we heard about also today, the digital asset ecosystem is broad. There are lots of different components of it. We've got stable coins that we've talked about, which innovates around payments. We've got things like Bitcoin. We've got commodities. We talked a bit about carbon credits, but our primary focus is actually that fourth box, which is digital securities. So as I just mentioned, these are SEC FINRA regulated securities, just like stocks and bonds. And that's sort of the main focus of where we work. And now we're also branching into the commodity space with the carbon forwards, as we mentioned. So just to kind of give an idea of the overarching process, probably talked about bits and pieces of this throughout the day, but just to make it easy for you to see how it works from beginning to end. At the very beginning of it, we meet with a sponsor, like some of the folks that you've heard from today. And we, first of all, just assess the deal. Is this a right fit? Is tokenization the right capital market solution for them? Understand that they do some diligence on both the sponsor and the asset to ensure that we are offering something of quality to the market. Then we move into digitizing the asset, which means creating digital tokens that now represent equity or debt in the asset. Then at the sponsor's discretion, we can offer one or more security token offerings. So we may tokenize, perhaps all the equity, say $20 million worth, but at the sponsor's discretion, we may decide to offer an initial offering of, say, just 10 million at a certain price point, test the market there, and then they have at their discretion, they could offer the other 10 million over time and so on and so forth. So you have flexibility around how many of those you do to put your assets out in the market. Then once new investors buy those tokens, we also offer the management process, so essentially token management, fund management of those assets. And then finally, to complete the cycle, you have secondary market trading where people have an opportunity to sell their tokens, and that's where the liquidity piece comes into play. Again, I think sometimes timing helps you. So when we started off in 2018, we were right in the middle of the ICO crackdown. There was a lot of confusion around crypto projects and all kinds of blockchain projects. But the SEC in early 2019 mandated that even though they banned SEOs, they actually were going to support STOs, security token offerings. And that gave us confidence that this is where the future was going. And as you can see from this chart, over the last few years, and increasingly so even over the last few months, there's been increased momentum around regulatory and industry support, with all the big players now kind of leaning into this. So I think the headwinds are definitely in our favor.
So this is a slide that I like to talk about because it kind of shows the projections of where we're going. Everyone says that there's a freight train that can't be stopped. I totally believe that. BCG, Boston Consulting Groups, they're saying that tokenization is going to hit almost $19 trillion by 2033, which is coming very soon. But as you can see, real estate is on the leaderboard with $2.5 trillion estimated at that time point. We're really focused on this, of course. We think it's going to even continue to grow, being the largest asset class. Next slide. But also, the reason why I was asked a lot of questions about family office and generational wealth is because we see the wealth transfer pretty significant over the next 20 years going to the next gen. Almost $84 trillion is moving in that direction. And I'd say about 40 trillion of that is real estate. So we're really focused on to communicate with the next gen and educating the next gen and following that journey along with them. So because we see them as our future buyers of our product. You can see that their tendency for investments in assets as it goes to the scale of generational transfer, that it started with the silent generation and then baby boomers focusing really on hard analog assets. But as you see, Gen X, millennials, and Gen Z, they're fully focused on digital assets. And we think, again, as this transition takes place, those are the customers that are going to be spending money. They're already very deeply into cryptocurrencies. I think digital real estate is the next best investment for them.
Okay, so now we're going to talk a little bit about sort of the details of how this process actually works, just to make it more tangible for you. So first of all, we're marketing digital securities, and we're actually, through our federal license, able to sell under two main regulations. Regulation S, which allows us to sell to non-US investors worldwide, and then Regulation D, which allows us to sell to accredited investors in the US. And so structurally, what we've done for the foreign investors is create this Cayman feeder fund, which then feeds into our special purpose vehicle in the States, which then makes this very tax efficient for international investors, which is one of the concerns that foreign investors often have. So we've kind of thought ahead of that to make it equally accessible for both US and non-US investors. So I'll go through this quickly, but these are sort of the main steps in the actual process. So step one, as I mentioned, we start off with what you do in traditional real estate deals, some financial analysis around the deal, how viable is it, what's the track record of the sponsor, what's the best capital solution between the equity and the debt and on the capital stack. And then finally, we mint security tokens, primarily focused right now on equity, but we also have the ability to use the same structure to mint debt-based tokens as well. So we can tokenize both the equity and the debt components of the capital stack. Then we move on to step two, which is primary distribution. So this is sort of akin to doing an IPO for a company. We're sort of doing an IPO for the asset. So for example, today, this is the first time that shares of the Riverton Hotel are now available to anyone worldwide. So you're allowing the owner of the asset to have global access to liquidity. We do that under those two regulations, as I mentioned. We actually have a two-step process within this. We start off with what's called expression of interest, which you guys can do today. And the idea of that is sort of like a soft reserve of how much people would like to invest. We do that because we want to build up enough interest in the asset before we then switch it to live sale mode. Once we switch it to live sale, then we accept funds and we close it out. And then we move on to step 3, which is basically managing the investor relations and the dividend distribution for all those new investors, which again is also something that is way more efficient using blockchain. For example, people, if they choose, could get automated dividend distribution straight to their wallets. And also, I think was also mentioned, we're exploring things like increasing the cadence of distributions as well. So instead of just annual, you could have quarterly, monthly, in some days, some world, you may even be able to get daily distributions ultimately. So exciting things for the future. And then finally, liquidity. So these new investors have an ability to put their shares up initially via bulletin board, ultimately via an ATS, alternate trading system, to actually get bids from all around the world instead of being, for example, in the traditional way where you might just get one offer from the REIT or from the GP, and you don't have much optionality there. So I'll let Ed talk a little bit about the details of.
This is also what a fun part of our process, which is how we structure deals. We have different ways that we can put pieces together, and it depends on what the sponsor's needs are. So if a sponsor has expensive debt, they like to extinguish that expensive debt, like we have a sponsor here with this hotel, was extinguishing the debt. They want to be debt-free and low leverage. So that means a much more safe investment, low risk involved. So we're paying off the debt. So he has a asset that's totally debt-free. Or we can look at, debt that makes sense. You might have a low interest rate debt that's, through the government that's fixed for the next 40 years. It's a low interest rate. So it doesn't make sense for us to change the debt. We'll now focus on the equity and see how we can recapitalize the equity up to 90% of the available equity on the project. So we always look at the full capital stack, understand what the full value is. We agree on the value. We try to be aggressive on value. But then when we figure that out, we're now trying to sell off as much of the capital as far as LP equity as the sponsor wants to raise. So this is kind of usually an example of how that's structured. But it can be various ways where sponsor might just want to sell off 10% of their equity to raise a little bit of money, for some cases to be able to pay the bank for a new loan because, the value has come down. Banks saying you need to bring cash to the table. So we sell off maybe 10 to 15% of the equity. So now they can get a loan that makes sense and continue on with their project. Next slide. And people look at traditional versus funds, and you may remember the problem Starwood had last year, where they had cash calls coming through for their funds and didn't have the liquidity to pay those investors off, and investors are kind of trapped in a structure where is a closed-end fund and there's a NAV base, and people are now trying to get out, and they don't have the capital to get them out. In this structure, when we put the fund together, you never have to worry about paying off your investor. The investor comes into the fund, they appreciate the benefits of the cash flow from the fund, and when they want to sell off, they can come to us, put their shares on the market, and get liquidity so the fund can continue to move on. I think I told some people today about a REIT that wanted to recapitalize some of their stock because, the values of their shares was down and they needed some capital to buy into this, amazing low interest or low value market, but didn't have the capital. So rather than trying to sell shares to the REIT to raise capital and dilute the value of the REIT, or even try to sell off the assets that have reduced value and then also have either a negative return or no profit, they decided to take 49% of the assets, have us evaluate it, figure out 49% of the equity of those assets, sell off that equity. So now they have fresh equity they can use to recapitalize and get the flywheel turning by buying the real estate without taking a loss on the asset. Now the asset can appreciate in value as interest rates come down, and now they look like heroes. So a lot of different functionalities we can use, and this gives you an idea of the difference between the traditional and non-traditional. This is also a favorite slide because we say, if you're a property owner, you never want to sell. I mean, why would you? I mean, the only reason you sell now is because this is how you have to generate your profit and share that profit with your shareholders by giving promote. But in reality, if you could tokenize the equity of your stock up to 90% and keep 10% as an LP and 100% of the GP rights, then the GP controls the property, makes all the investment decisions. Now you have very little equity in your property, and you now have a GP split. Sometimes it's 70-30, 70 to the GP, sometimes it's 50-50, depends on the asset. But you're now generating significant returns of cash as a GP without having to have a lot of equity trapped in your asset. And eventually you have zero equity in the property, it's just paper equity, but really zero economic equity in the property. And let's say 5 or 6 years later, the cash flow is stronger. You're now bringing in a lot of cash flow for your GP structure. And your LPs are happy too, because they have a preferred return. Let's call it 7%, but they also are generating profit from the increase. Maybe it's 30% they're going to get on the waterfall. So if they're getting 7% on a preferred return, that 30% can improve that 7% over time as you continue to improve the asset. But we think owners should never want to sell their property. The other benefit I think that we don't think about is that as your GP structure continues to go up in value in terms of more cash flow and you have very little equity, that GP equity entity is worth a whole lot more money. So if you ever wanted to sell your GP entity to a larger company like BlackRock or whoever it might be, they'll be happy to pay you a nice multiple for what you've built in the property. So that could be your exit as a GP rather than just selling off the asset. Because pretty soon, when we tokenize all the assets in the world, there'll be no major assets being sold one to the other. They'll all be shares being traded. And if you don't have any assets, you're still looking to buy, you can be out of luck as a GP trying to acquire new assets unless you're a developer. So this is one of my favorite slides. I tell our clients, do this and never sell, continue to build the AUM, and the AUM will continue building higher cash flow.
So we talked about the benefits of tokenization and our model from the sponsor perspective, from the asset owner perspective. Now we're going to dive a little bit into what are the benefits and advantages for an investor that invests into tokenized real estate as opposed to the traditional approach. One of the first things to realize early on in this was that this is not really a one-size-fits-all. There are different categories or segments of investors that have different reasons and different benefits of investing in this type of new asset. So we'll go step by step in the preceding slides. But at a high level, you've got institutional investors, as I just mentioned, with these closed-end funds and the issues they have there in terms of liquidity, in terms of optionality and getting redemptions, and the flexibility that tokenization brings for them. You've got family office and high net worth folks who can now diversify their investments across a larger number of assets because the minimum buy-in is much lower. And also, of course, they also have the liquidity advantages as well. And they even have potentially succession planning benefits where, if the patriarch or matriarch passes on, you don't have to fire sale all the assets just to distribute amongst the heirs. You can actually just give them their fair share of tokens, but keep the core assets within the family estate. Then we've got foreign and global investors who are looking to just get into, so let's say, high quality US assets, and maybe it's a currency hedge against local currency devaluation or other reasons they want to park their money in a safe place. This makes that process extremely seamless with significantly reduced acquisition costs. And then finally, as I also mentioned, the next gen and the crypto folks who are very comfortable with digital assets, already have a lot of Bitcoin and other assets, but now may want to start to diversify and start building up a portfolio of yield-bearing digital assets, of which real estate, of course, is a great choice. So this just talks in a little more detail about the specific benefits for institutional buyers. You also have things like flexible rebalancing. So if you want to rebalance your portfolio, now that this is digitized and ultimately you have liquidity, you can actually rebalance your portfolio in much more frequency. Ultimately, it's probably AI agents who will be doing your rebalancing for you anyway. And one of the other things that we were just talking about over dinner last night is that typically with alternative assets, you have you might have 10 to 15% allocation into alternatives or into real estate across your whole portfolio. And one of the reasons it's capped at that is because of the historical liquidity. But if you now have much more liquidity, that might actually enable people to expand how much they put into digital assets, into assets like real estate, which in turn may just increase the whole real estate market opportunity. And then we talked about this already, but these are benefits to family offices, high net worth individuals. Typically, they have at least 25% of their assets within real estate already. Now they can diversify their portfolios. They can diversify in terms of asset types or global distribution much more easily. We talked about the succession planning benefits, portfolio efficiency, in terms of also being able to get in for a low amount, and then the global accessibility as well. So a lot of benefits for folks, and ultimately you can tailor your personal investment portfolio in the way that you want, just like you do with stocks and bonds today.
So really, we see this as, global exchange of capital, flows, outflows, and inflows of capital from foreign investors into the United States. But we think we're also giving visibility for U.S. Investors to see what's going on in foreign countries, because, of course, you're going to balance your portfolio here in the U.S. You might find that other countries are giving stronger yields with less risk for different types of assets classes. So we see, capital going back and forth. That's why we're focusing on Reg S and Reg D. Next slide. This is a strategy we were talking about with Anthony Scaramucci with regards to Bitcoin, for example. Putting and this can go with any major cryptocurrency, is to put it to work, because you sit there and look at this go bounce up and down every single day, and you're wondering what's going to really happen. Is it going to fall to the floor? Is it going to go up? You don't know. But if you can actually borrow against it at a reasonable rate and buy real estate that is making a stable income, it's actually paying for that interest cost on your borrowing for the Bitcoin. And if there's a positive arbitrage, which really could be, that could be used to either take out cash or buy more of your cryptocurrency. But it's really just putting crypto to work, and you're going to see this more and more as people become more familiar with how to use cryptocurrency to their advantage. And we loved it because we think it helps us sell into that cycle of capital.
So these are just, we talked about the steps from a sponsor perspective about how an asset gets tokenized. This is a quick overview of the steps from an investor perspective and how simple it is to actually get your capital into a new real estate asset anywhere in the world. So you go to the site, you sign up. All investors, whether US or foreign, have to go through KYC AML in order to meet FINRA compliance. You complete a basic profile. You browse the site, you pick the asset or the fund that you're interested in. We do both single individual asset tokenization, like, say, the Riverton Hotel, or we also have funds like the Altus Fund. So you pick a particular asset you want to invest in. You go through an online signing of all the relevant documents. So these are familiar documents for private placements, PPMs, shareholder agreements, operating agreements, everything that you would expect to give you the right protections. Place your order, send in your funds. We support both wire transfers for people who are not yet comfortable with things like stablecoin, as well as stablecoin for those who are. And then you've got your tokens in your wallet, and you're now the proud owner of some digital real estate. So simple as that. We've also put a lot of thought into the liquidity question. And obviously, it takes time to get from where we are today to the level of liquidity of, a NASDAQ or something like that. But instead of a zero binary approach, we're thinking about it in a staged approach. We're starting off with a simple bulletin board, which means at least if you hold these tokens, you bought these tokens, you always have the option now to post them through our broker dealer onto the bulletin board. If somebody anywhere around the world puts in a buy offer to match your sell offer, now you have a way out of your assets, as opposed to being stuck in there for 5, 7, 10 years like you would in a normal real estate deal. From there, we intend to progress to full-on ATS, alternative trading system, sometime in 2026. And then, with recent announcements with folks like NASDAQ talking about tokenizing all their stocks, we're hopeful that ultimately we'll be able to have global partnerships with major exchanges around the world to provide our assets side by side with stocks and bonds throughout the world.
So this really is our strategy for disposition and distribution. We think that partnering with many different types of entities will help us with distribution. Many people in this room, we have Federa, we have Stellar. We feel that the interoperability of those blockchains is a combined net worth of about $26 billion. in value with probably 6 million users. And they're all going to be looking for ways to be able to buy digital real estate with their currency. So that's a distribution channel that we're very proud of and looking for much success for. The broker dealer networks, there's some broker dealers in the room who want to work with us to be able to sell. You saw some of the real estate brokers are coming on board, getting their license so they can go to their family office clients and start selling them securities as well, showing what the benefits are. IRAs, we're talking to IRAs, and we try to treat them to events, something like this, so that they can now advise their clients on buying. So distribution is a big objective for us, and we think that we're doing a fairly decent job of planting seeds of distribution. Family offices, I mean, we're partnered with family offices that you can see they have advisory services of hundreds of family offices. We think being on that platform allows us to showcase our properties and give them immediate access to digital assets. That's going to become a very important point here, is that you're going to be clamoring for this in the next 24 months. I almost can say I guarantee it. And you're going to find out who can actually deliver this product to you on a compliant way. As we're continuing to build and channel this to you, you'll have immediate access to buy. And then if you want to sell that off to somebody else who doesn't have that access, of course, they might be paying a higher price for it. So we think having direct access to high quality assets like this is very important. When I was selling real estate at Cushman Wakefield, the reason why people came to us because we had a Rolodex, just like these guys had the Rolodex on where to get the product and where to sell it, right? And I think that's what you want from a professional, is someone who can direct you to find the kind of assets you're looking for very quickly. Because let's face it, pursuit costs are expensive. People can fly around the world, and there are people in this room who have spending hundreds of thousands of dollars and still coming home with a dry hole. If you have direct access to assets, it's almost like a very quick deal. And with blockchain, it's not T plus 9 months, it's T plus 0. So you can buy extremely quick. So that's really it. I hope that you guys really enjoyed all the information that you heard today. I hope you take a close look at the assets that we're listing. This is the first time we've launched this many assets to the world with a license. We're very excited about it. We think it's going to sell off very quickly. We hope that you guys, use the QR code, look at these assets, express interest. We're not asking for a check today, but we will follow up with you to see what you're looking for, how much you want to spend. You give us an idea on this expression of interest and help you, meet your needs for commercial real estate now and the future. So thank you very much for coming and attending this part of it. Hope you stick around for the champagne we're going to have and more networking. There's a lot of great people in this room to network with. And I think that's it for right now. Thank you.
Thanks a lot, guys.